All right, we're going to do a little bit more review. We're going to look at the 24-hour chart, talk about management, and a few miscellaneous concepts. In addition, I'm going to add a recording of a review of my trading screen, or actually the scanning screen. It's not what I trade from, but I do use it for scanning, and I'll explain more about that in the video as we review a few gaps that were actually happening on the day when I was doing this recording. All right, so take a look at this chart, and the blue line is where the stock was actually opening up. And just go through this, give it a rating, based on what you've learned here in the class. And so we'll go and look at, is it gapping above or below? Well, actually, of course, it's gapping below support. Is it gapping below, because it's gapping down, a bullish wide range bar or a bottoming tail? Below a base or continuation, is there a void? Well, relative strength and weakness you cannot tell because I don't have the market here. And, tell me, look at the gap and about the end of day base, which you can't look at here, but we will go ahead and review that when we move ahead. Take a second and take a look. Okay, so definitely gapping below support. It did here. It gapped below a bullish wide range bar. So there was lots of shock right there because of the size of that reversal. It was gapping below the continuation and this pivot low right there. It definitely had a void. Again, we don't know about relative strength and weakness. Is the size of the gap ideal? I would say yes, because it just clears this swing low here, and it's not an excessive gap. And did it come from an end of day base? And you can see here on the 5-minute chart that absolutely it did. Everything is in alignment as far as our moving averages are concerned. The first 5-minute bar was a topping tail bar, so we do have a 6-point play, so we can go ahead and enter that under the low. If we were using the 2-minute chart, which here I'm saying is okay, what you would have here is a reversal at the top of the topping tail bar and then a move down, because this went up and it came back down again, and that's covered in our retracement concepts. Now, as far as management on the way down, there was no reason to ever get out of this play because it never took out a prior bar's high. So when we manage, we will, we can go bar by bar and trail prior bar's high, and we're certainly not going to do that initially. So starting out after this bar down, we could then move the stop up above the topping tail bar. You can just manage to see what it does, and if it was to form a pivot, if it was to have then moved up and then rolled back down again, we would then trail below the high of that swing high there. Now that didn't happen, it just kept moving down, and I've got 10 o'clock marked here because that's a reversal time that you want to pay attention to. As the momentum stalled here, 10 o'clock, certainly would make sense to cover part of the position, and if we assume that prices broke lower at this point, we would then have a swing high to put a stop up above there. Now, amazingly, and of course we would not have known it at the time, I mean, this rallied all the way back up to the high because that's a bottoming tail bar, and that's, the end of the day. So at some point, this began to stabilize, and whether it did it here, it was able to get all the way back up to the high of the day or just below the opening price. Now, the next example that we have is a bit different because it gapped down. And what I want you to take away from this is that this was a bullish setup where prices had consolidated for several days. It moved up the prior day, closing near the high. And this type of a gap down often bought because this is a bullish pattern suggesting it's going to go higher. Now, the intraday pattern wasn't in alignment to be buying it at that time. And as I covered with you, is that when the intraday pattern is not in alignment with our bias, and in this case, because it wasn't a sizable gap down, and I would expect this to continue to move higher, I wait for the intraday time frame to come into alignment with my bias from the higher time frame. And this is exactly what it did, and where it pulled back and formed a buy setup right there. Note the bottoming tail bar. And I love this pattern, this particular setup, because rather than having a 1-bar reversal, it then stabilized for another bar, and then it moved down a little bit and reversed. So I have a 3-bar reversal, which means it had 15 minutes to create an area of support and then started to move up. Now this right here, you don't have any swing lows. However, look at this topping tail bar. So prices were higher and it went down and reversed back up again. This 2-bar reversal, and ideally this would be a red bar and a green bar, but the topping tail bar certainly works. This 2-bar reversal is going to be a pivot or a swing low in a lower time frame. So once you get the wider bar moving up here and it takes out the high, you can bring your stop under that low. And over here we did have a pullback and a swing low, and prices then made a new high on the day and they pulled back under the swing low. So we are out based on taking out this major support area. Well, let's take a look at the 24-hour chart. This isn't something that you would always use because many stocks just don't have the volume. Like it says, adequate volume to really make them useful. Nothing much is going on there to make any sense out of the chart, but at times they do, and we take a look at that, and we would look for a pattern that sets up at the open in alignment with that pre-market chart. So that's going to be our biases created from our criteria that we've covered, and then we see what happens or lines up in the intraday time frame. So here's a chart of IBM, which gapped up on this particular day 6.6%. Now you'd say, well, is that excessive? Most of the time these gaps go in the direction of the gap the majority of the time, and this had been moving down, so there was a bit of a shock here from the point of view of, if we think about it in a higher time frame and retracements, this came all the way back down. So in a higher time frame, that is a red bar. Primarily, we are looking for the wider red bar on the daily time frame. But I'm just pointing out this retracement here, 100% retracement back down and gapping up above it is a shock. Now, this is what was happening pre-market. This grayish area is prior to the open, and the white area is at the open, and you can see it's in an uptrend. And there was plenty of volume because we have complete candles here, and we can distinguish a pattern. So at the open, prices moved up, and they pulled in and created this support, and it did come down to minor support, and began this rounding bottom here, and note the bottoming tail bar. So based on that, definitely would be a buyable event. And yeah, you do have this void below, but when we look at the 24-hour chart, we see the uptrend and everything I said. It gives us an entry point based on bar by bar analysis and what happened there. Here's the software that I use. It's called TC2000. It's relatively inexpensive to see what's happening intraday, and for these scans to work, you do have to be a platinum subscriber. It is great software for end-of-day scans as well. Platinum subscription, I think, is $99. I don't know for sure. But in any event, this updates at the open instantly, and we get percentage gaps, and I'm looking for primarily what the biggest gaps are, and I go through these. This is linked to the charts, and I could see the percentage gap. Is it below its open and below yesterday's close? Is it gapping below the prior close and below the prior low, and so on? And look for these to line up, and then, of course, on the bullish side, looking for these to line up, and then the pattern. So on this particular day, Michael Kors was gapping up. This is the opening price, and we had this reversal, and it moved up, and it actually held up all day long and moved sideways, which was quite bullish. And on the 24-hour chart, this was pre-market, where it came down into the end of day base from the prior day and turned up from there. So here's another stock, another one. It was CRC that was gapping up on this day. It had a consolidation. It didn't have a red day the prior day, but the size of the gap and clearing this resistance was ideal. It just gapped above the prior high, so it wasn't excessive in any way whatsoever. It had an end of day base, and then it began to consolidate there and going sideways. The bottoming tail was a signal, and the entry point could have been taken at that point. You need to put your stop under here and then wait to see how this develops. I'll say what happens. And this was a secondary entry point right, very bullish, where it moved up and then consolidated sideways and then took off from there. Now, everything coming into alignment. Bullish pattern. I point out the downside move that didn't follow through and the retracement back up into the 200 MA. I don't know what's to the left here, 'cause obviously I can't see it. And this consolidation, and then just a beautiful gap up just above those highs, and you can see it here on the 15-minute chart. Just everything coming together. Great setup. Well, this gap trading, it's day trading. It's a short-term event, and typically you're going to know that you're profitable within 15 minutes, 30 minutes. You may even be out of the trade from your entry point. I said, these pro gaps, as we looked at many of these, they can have longer-term implications and what they suggest. Keep that in mind when you see these gaps. It's a great idea at the end of the day to go and review the stocks that are in your gap scan and see how they ended up at the end of the day. So after that period of time, they're going to have moved in your direction, or they'll stop you out, and you're going to know what to do. I've explained bar by bar analysis to you. We've talked relative strength and weakness. We looked at intraday patterns. I've talked about candlesticks. I've given you everything to be able to determine high probability trading opportunities, what you've taken in this course. So we're always looking at the size of the gap. The shock is going to be a big factor. Definitely avoid, and you're going to wait for that intraday pattern to form. That's going to be in alignment with your bias. And if it doesn't, you're not going to do anything. It's just what a professional trader does. And as a gap trader, you're going to find opportunities almost every day, especially during the time of earnings season where there's lots of gaps. But as a caution, you have to narrow down your focus. Don't look at too much, because you'll just be overwhelmed. There's going to be big movers that you're going to not participate in, and it is what it is. But you're going to be able to distinguish the great opportunities, and you'll have plenty of them to take advantage of. Just believe in what you've learned and yourself. Be patient, be disciplined, and you'll be able to make a very nice income just trading the gaps. Lastly, be aware of the reversal times. I mentioned 10 o'clock and 10:30, and trade the gap as a master trader. Lastly, I'm going to provide you with a video where I've reviewed some of the gaps through the software and comparing that to what happened in the broader market on that particular day. And as mentioned, you're always welcome to reach out and email if you have any questions. All the best. Stay in touch and be that master trader.